Hello and namaste, and also my greetings to on the auspicious occasion of Guru Nanak Jayanti today. And welcome back to my channel. This is Niraj here once again. And I would like to first of all apologize for a long absence from this my channel because of some personal issues, as well as being little busy with small things, and and also, to be very frank, not much ideas coming into. I was not getting much ideas about the way market was going up, and so all it was all mixed up together. Say that I took a kind of a leave from this. So having said that, in today's video, I just would like to connect or the update with what's the going ahead, because already it's a long time and market has gone to the all-time highs all over the world, and because of the expectation of that virus discovery has happened, so that fear of corona is subsided, and the resumption of activities, particularly in India, so kind of economic activities coming to kind of normal. So uh, all these factors together has taken market to all-time high. But what is the new? Because this in the stock market, we always say that okay, this event has happened. So what next? What is going ahead? So let's talk about what is going ahead. Is that Fed will, as you know, that U.S. Fed will continue to pump in money and support this economy, and that liquidity of money will find its way into this emerging markets like India, and whichever the market is doing well, and particularly having shown that comeback or that bounce back from this economic recession or depression is much faster, say in emerging markets like India and the Korea, and in Asia in particularly. So you will continue to find that, and with the coming up of the event of U.S. presidential election behind us, and so there are a lot of this expectations or the optimism about that things will be coming down, and will be coming back to the normal economic. At least the recovery will start and all the economic activities. So having said that, my particular view is that still there is a lurking fear about virus, because you can see in Europe this partial lockdown is still in force, and there are cases are rising with the more intensity, particularly in say in Europe and Russia, and and India also will see that that if if God forbid, from this onset of December and January, when there is a real winter and cold starts, and how this virus cases prop up. So all this said and done, I believe that we will not see till the next April, or the normal, at least for the global flying aviation activities, that the people will start flying, and so that regular basis travelings will still not be restricted to the domestic circuit in each of the countries, and not much international travel you will see. And that is why the reason is that you will not see the oil. That's what my particular view is, that oil, the demand will not be coming back to this normal because of this particular restrictions on this aviation, and still that fear of virus in the minds of the people and the passengers. So they won't be undertaking, and also government will still not make it like normal scheduled operations for the aviation, particularly for the international air operations, so all the countries. So that is why the demand will still be subsided and subdued, and that is why you will not see the oil recovery, and unless until that happens, we are not going to see the full bounce back in the economic activities. But yes, that pace of bounce back or the economic recovery will be smooth, at least coming back. And because of that, I think the governments all over the world, and the particularly US Fed, will continue to support and inject liquidity, or continue to keep liquidity up, and stimulus to support the market, and that is the reason you will see the stock market continuing to do well, irrespective of whatever the economic ground level situation. And in that sense, I continue to believe that you should look into this basic materials and that metals and commodities, and particularly metals and infrastructure related commodities, because and the food commodity, agri commodities, because that is where the that when the activities start, that factories and all these things. So the first thing will be that requirement of all these basic metals and the food. It's keep on going on, and that is where that that demand also may start to come up with, and then you will see that recovery percolating down to this other level when all the normal business activities and economic and social life activities happen. So with this kind of thing, I believe that and people ask me about that Reliance Industries stock. So my view is that whatever the triggers are there were there, it is finished for the Reliance Industries, and there is no more trigger coming for them, as far as I understand. Unless and until you see a big jump in the oil happening and the demand coming back, and aviation and air fuel, that industries coming back to the normal, you will not see that rise in the oil demand and oil prices, and because of that, you will not going to see the Reliance Industries having any other fresh trigger other than whatever the triggers regarding that coming of investment money coming from private equities and venture capitals into that geo and digital platform, and Reliance retail platform, and also Reliance retail taking over future retail and expanding, and so all these triggers are over for the timing. I don't think so this stock will go anywhere. So if as a smart investor, I think if you are sitting on money in Reliance Industries, you should get out of that. And if you are not, then you continue to wait for the hold it and wait till the next trigger in whichever form it comes. Regarding the Burger India IPO, I have not gone through this much details or the financials, so I will not will talk as with the authority. But having said that, my common sense or what I understand about this generally in this business or in the life is that when this, if you look at the history of McDonalds and KFCs in India, that they have not been able to penetrate much, like say in Russia or in Europe and in other parts of this, in Latin America, because India has its own, what do you call the, we call it the fast food, in the fast food and much healthier food in terms of the small South Indian restaurants and the roadside eateries and all these things, and what Indian taste is still not adapting to this kind of fast food of say McDonald's. And so Burger India is also in category of that McDonald's kind of a thing. And if you look at the Indian history or in India, this is only Domino's Pizza, because Indians love pizza, pasta. So I think that if that would have been the category, Domino's Pizza has done wonderfully well over the last 10 years, and it continues to do well. But this and in time of this kind of a COVID, where still there is a lot of restrictions, particularly in India, it's not free flow economy, right? Because every state has its own rules of lockdown, partial lockdown, or partial opening up. Not everything is opened up in this economy in India. So that is why I don't think so. They will be able to expand, or even if they expand, as I told you, the test is not yet. It will still take a lot of time to pick up and to come back to this normal activity. So that is why my advice is that you can stay away from IPO, and maybe if you know that when it opens, when it is listed on the stock exchange, and when you find the right opportunity, when the things happen, that is the time you can look into this Burgers India IPO, Burgers India stock after it gets listed. But you can stay away from Burgers India IPO. That's it from my side, and and thank you for watching. And in case of any particular questions and this thing, you can always downwards, all my description is given in the description box down below, and we'll come back with some other ideas. And if you like, you please put a like, and share it with your friends, and keep watching. Thanks a lot. Namaste. Ciao from Moscow.